Goodbye 2025, hello 2026 real estate predictions. I'm Eric Peterson, broker at Kopa Real Estate, and 2025 was very challenging in the real estate market. And thanks to your support, we still had a great year and have a lot of momentum going into 2026 with some beautiful listings hitting the market in January, and we're optimistic for the rest of the year. So it's always fun to make predictions, and let me know in the comments, what do you think is going to happen to the real estate market next year? And let me know what you think about your house. Is it worth more? Is it worth less? And by how much? Right? I'd be curious to see what everybody says. Now, last year, I nailed it when I recommended anyone planning on selling to get your home on the market earlier in the year. And that turned out to be good advice, as sellers who delayed saw increased competition and softer markets in the summer. So fortunately, most of the people that came back to me later in the year said, well, you told me not to touch the stove and I touched the stove, so not your fault. What's going to happen in 2026? Well, let's fire up my crystal ball and make some forecasts, which are also known as guesses. So the best way to do this is I'll give you my opinion about some of the other forecasts made by some of the national housing forecasters. And keep in mind, when it comes to the housing market, in this area that we serve is huge, and there's so many variables that you shouldn't make your life plans, at least until we talk, based on this information. You should also understand, I'm largely speaking to the people who contact me with life events happening, such as their daughters having their first grandchild in Chicago, and they want to know if they should move now or if their home will be worth $100,000 next year. Nobody wants to feel like they made a mistake, so that is a reasonable question. Let's start with mortgage rates. So the Federal Reserve cut rates again in December, but indicated they may only make one additional cut in 2026. It's expected President Trump will appoint a new Fed chairman in 2026, and likely someone who's in favor of additional cuts. Although mortgage rates are influenced by the Fed, they're more closely aligned with the 10-year Treasury yield. In Redfin's 2026 predictions, they expect mortgage rates to average 6.3% for the entire year, and Fannie Mae expects rates to stay about where they are for most of the year and gradually dropping to 5.9% by the end of 2026. National Association of Realtors expects rates to be around 6% for the year, and most mortgage companies are quoting rates closer to 6% right now, but the average rate is currently about 6.3%. Now, despite that not being the news that a lot of people want to get about maybe rates going down to 5% or somewhere like that, which I don't believe is going to happen, this still isn't the worst news in the world, because one of the things that's been keeping a lot of buyers on the sideline is this kind of up and down with mortgage rates, and they don't know what to do, right? One day they see rates and the next day they're 0.25% higher. And just some stability in the mortgage market where people aren't like, well, if I just wait 3 more months, rates are going to be 5%, that may cause more buyers to jump into the market. So all I can tell you is for my business, I'm planning on 30-year fixed rate mortgages to be about 6% to 6.3%. In other words, about where they are right now. So that's not the 5% we're hoping for, but if we can still just get some stability where buyers aren't seeing rates go up and down as much that they have over the last 4 years, that would be good for the market. Now let's talk about the number of home sales. And I think this is an important concept that you want to understand. When you hear about the real estate market, if it's getting better or worse, to a large extent on the national media, it's simply talking about the number of transactions. So that doesn't always equate to the price. But for those of us in the real estate business who make money on the number of transactions, higher number of transactions is good. So National Association of Realtors is predicting that the number of homes sold nationally will go up 14%. Redfin predicts a 3% increase, and 14% isn't a realistic number, in my opinion, unless it's a result of prices dropping significantly, or mortgage rates getting down to that 5%. And mortgage rates are only going to get down to 5% if there's significant weakness in the job market. So one thing I am sure of is, based on the number of people attending our seminars and contacting me about selling, there will be a lot more people who try to sell next year. And that may seem alarming because our inventory of homes has been an all-time high. But I just see more and more people, they've got life events happening, causing them to move. And a lot of people, after years and years of feeling like they're locked in with maybe their low interest rate or didn't know where they wanted to go, they're just sick of living where they are and they're ready to move. The reason I say try is because our entire market, maybe about 30% of the homes listed in 2025 didn't sell. So whether or not the increased listings translate to increased sales will depend on mortgage rates, job growth, and how confident people are with their jobs. So if we see a decline in prices, that could cause buyers who've been on the fence to jump into the market, increasing sales. If you're selling your house, you probably don't think that you should care about rental rates, but there is a trickle-down effect from the rental market to the resale market as well. And so let's talk about the rental rates. Redfin predicts national rents will rise as demand for apartments rises and supply falls. Well, that's not going to happen around here. So Austin is still leading the country, the universe, in the number of apartments being built. I mean, everywhere you go, it seems like there's more and more apartments, 1 month's free, all kinds of incentives. And so that's the bad news is it's, we still have so many projects that are coming down the line and the vacancy rate of these new apartments is very low. So that's why they're offering all of these incentives. So the good news is this is a cycle and eventually all of the apartments will be completed and rented and we'll see rents going up. But that's a couple of years off. And so for the single family home market, my advice is you should do everything you can to get a tenant to renew their lease. Otherwise, you'll likely rent to a new tenant at a lower price, and it'll probably take you a long time to get a new tenant. And finally, let's get to what everybody wants to know about home prices. And remember, I want to know what you think about what your home will be worth at the end of next year. And there isn't great news when it comes to predictions about the Austin area real estate prices in 2026. Redfin included Austin in their housing markets most likely to cool down in 2026. Zillow's predicting a 2% lower prices next year, and they do break it out by individual zip codes, so you can look up what that is. And Realtor.com is predicting prices will go down 5%. So I do think prices are likely to continue to go down next year, somewhere between that 2% and 5%. More importantly than getting a prediction like this exactly right is understanding the direction that the market's going. So we aren't likely to see tremendous appreciation in 2026, which actually makes it easier for me to give you advice if you do want to move, right? That person who is wanting to hold off and missing out on the first year or first 2 years of seeing their grandchild, that's probably not a good bet because you're likely selling your home a year from now for less money or certainly flat, right? So how do all these predictions impact your plans? Well, I'd really have to know more about your situation to give you tailored advice. So call or text me or book a time on my calendar at kopaconsultation.com so we can figure out what makes sense for you. Thank you so much for your support in 2025, and we look forward to serving you in 2026.